Australia and New Zealand economist James McIntyre joins us now. And James, we did hear from the RBA a moment ago. Still not a lot of confidence there on CPI. How's the inflation and growth outlook looking? Are we going to get cuts in 2025?
Well, they're still reticent, Paul. Thanks for having me, by the way. The RBA is still reticent. They want to, see that inflation is coming down and it's coming down sustainably. On the growth front, though, things are starting to look better. But how good things look is really going to determine the pace of policy easing. So when we're looking at 2025, we see not just the RBA policy easing, but a whole range of other policy measures as really being the linchpin for growth. Not so much the US administration, but a lot of domestic policies. We've got a federal election coming in the first half of the year. Migration has been a very big touch point for the economy. It's also been something that's been giving a surprisingly strong and resilient demand boost, something that's kept the RBA sidelined for so long. We've got one of the longer periods on hold from the RBA. But we see that migration story easing back, taking some of the wind out of demand. And on the other side, that should allow that inflation to continue to ease forward in the RBA to gain that confidence to cut. We think February's live, and there's a possibility of up to 100 basis points of rate cuts in the year ahead. And that should be enough to get growth going up, lifting up from about 1% in 2024 to almost 2%, just shy at 1.9 in 2025. That's our overall big picture view for Australia next year.
Is that going to perhaps reanimate the consumer who's in a pretty dark spot right at the moment in Australia?
Yeah, they are. Look, it's not only in terms of the bright spot in sentiment, but when we look at the numbers, that migration's been a key, as I said, support or prop for demand. But per capita spending has been in recession, and it's been in recession for a long time. And it's the worst we've seen since that 1990s recession, early 1990s recession in Australia. So very, very weak consumer. You haven't noticed it because of migration, but as that pulls away, we're going to need to see consumers open up their wallets. And when we're talking about the growth outlook being policy dependent, and the RBA is one of those pieces of the policy puzzle. Without, you're not going to get the rate cuts without a little bit of softening in consumer spending, but you're also not going to get that strengthening in consumer spending into the second half of the year, really driving that growth impulse towards the back end of 2025 without the RBA coming through.
All right, Australia and New Zealand economist James McIntyre there. Well, let's get more perspective about how consumers in Australia are spending this holiday season. Joining us now, Sarah Megginson, head of editorial at Finder.com. Sarah, give us a sense of where the Australian consumer is at the moment in terms of what your data is telling you.
Yeah, well, probably not surprising, similar to what James was saying. We are seeing spending trend down, and after 3 years of a cost of living crisis, it's not surprising to see people are spending less over the Christmas season, but they're still spending a phenomenal amount. So our research shows that this year, Australians are spending around $28 billion over the silly season. So there's still plenty of money flowing through the economy. It's just down about 8% on where we were this time last year.
And how's Christmas spending looking this year compared to previous years?
Well, as I said, it's 8% down on last year, but it's still reasonably strong. It's around $1,350 per person on average, and a huge chunk of that is still going towards gifts. Around $400 of that is going towards gifts, and a huge amount is still being spent on travel. So I think at Christmas time, particularly after a tough year, we all want to be close to family. So prioritising spending time together and having that travel spending is still a really high priority for a number of Australians. It's just a little bit less than it was in previous years.
Well, we've got persistent inflation, of course, and this is something I was discussing with James a moment ago, and the Reserve Bank, because of that, hasn't eased for more than a year and is showing no signs of doing so. Is this the whole story in terms of weak consumption, or is this only part of the story?
I mean, it's so fascinating because we've been following this data for a number of years, and every year we expect around Christmas time for that spending to slow down and for the bite of these really high interest rates to be showing in consumer spending. This is the first year actually in 3 years of us tracking this data that we've seen Christmas time spending trend downwards. And as James was saying, it's going to be really fascinating to see what happens next year. We were expecting at some point in 2024 to get an interest rate cut, and it never quite came through. So we're all kind of pinning our hopes on February as being the time that we see that cut. And that's really important too, because we will see a Christmas spending hangover in January. We know that every year credit card spending skyrockets over Christmas. January, a lot of people start the new year with a debt to kick off January. And we're also seeing an increase in buy now, pay later debts every new year as well. So it's a really not the ideal way to start the new year. And if we could get to February and see an interest rate cut from the RBA, that would certainly alleviate some pressure for Australian consumers.
What are some of the other things that are impacting consumer habits at the moment? Because I know you've found that there is a role to social media in all of this as well.
Yeah, that's also a really fascinating trend that we're seeing. A lot of the big social media giants are all putting a lot of energy into monetizing more directly through shopping. So for a long time, you've been able to shop through social media. You've been able to click on the links and go straight to different retailers. But now they're all starting to introduce these modalities where you can buy directly while you're in the apps. And interestingly, the number one platform that's driving that is Facebook. And we would have thought that it was perhaps more younger consumers in TikTok and Instagram driving that spending. But Facebook is older consumers, and that is 61% of Australians are using Facebook to drive their spending decisions. But we're going to see that increase. We certainly know that it's so much easier for people to spend now. Retail hours are not limited. It's not limited to when you can get to the shops. It is literally 24/7. It can be 2 o'clock in the morning on a Tuesday, and you can buy practically anything. So those opportunities to spend are really, really prolific these days. And it does make it harder for people. There is that temptation to spend and get those dopamine hits at different times. So it does make people harder to rein in that spending. And over Christmas, of course, we have so much pressure on families who have had a really tough year with all of their bills, with their home loans, with insurance, with energy. Every aspect of our bills have been impacted. Then we have Christmas spending, and coming straight off the back of that in January for a lot of families, there's back to school costs as well. So this is a really tough time for families. Hopefully we'll see in February, or at least, early in the new year, we'll see some of those interest rate cuts start to come through and take a bit of that pressure off for Australian consumers.
Well, also in the first half of next year, we are going to have an election, and immigration is shaping up as a potential issue here. We've already seen some tightening of policy on this from the government, but it's been responsible for a lot of economic growth in Australia. Is there a risk that this has an impact on consumption as well?
Absolutely. And I think it's been a really interesting few years. Where we are right now is not quite where we expected to be when the RBA first did modelling, when interest rates were very low, under 2%, and they were modelling what it would be if we added 3% to interest rates. We thought that the economy would be in much worse shape. They were predicting mass bankruptcies and, a huge amount of pain for Australian consumers. And we haven't had that eventuate, certainly not anywhere near the level that we were expecting. As James, your previous guest, was sharing, a lot of that has been absorbed by immigration. So, we're not exactly where we expected we were going to be. And every year, I would say for the last 3 years, we've ended the year saying, hopefully the tide is going to turn in January. I think this year is the first year we actually have that optimism of properly expecting that we're going to see interest rates start to come down and take that pressure off mortgage holders, but we know that it's not just mortgage holders. The rental market has put so much pressure on Australian consumers as well. So no matter where you stand, you have had a difficult 2024 and the years before it. So hopefully 2025 is that year where we start to see some of that pressure lifted.